Ever wished you could peek into the future of the market? What if I told you we can get pretty close by looking at Warren Buffett's latest moves? In this video, we'll break down Buffett's 2025 market outlook, including his investment philosophy, recent portfolio changes, and expert opinions. Stay tuned to find out what the Oracle of Omaha has in store for us and how you can navigate the market in 2025. Before we dive into the predictions, let's recap Buffett's investment philosophy. He's all about value investing, meaning he looks for companies that are worth more than their current market price. He focuses on a company's fundamentals, like financial performance, debt levels, and profit margins. Buffett also looks for companies with a strong competitive advantage, or economic moat, and trustworthy management. Buffett's value investing approach involves a deep dive into a company's financials. He wants to understand the business inside and out, almost as if he's buying the whole company. This means looking beyond the stock price and understanding the company's core operations, how it makes money, and its long-term potential. A key element of Buffett's strategy is identifying companies with a strong economic moat. This refers to a company's ability to maintain its market position and profitability over time, fending off competitors. Think of it like a castle with a wide moat protecting it from invaders. Companies with strong brands, unique technology, or efficient operations have wider moats. Buffett also places a high value on trustworthy and competent management. He believes that a company's leadership plays a crucial role in its long-term success. He looks for managers who are honest, capable, and aligned with the interests of shareholders. Another cornerstone of Buffett's philosophy is his long-term perspective. He's not interested in quick gains or market timing. Instead, he focuses on buying great companies and holding them for the long haul, allowing them to compound in value over time. Now let's analyze what Buffett's been doing with his own money. Berkshire Hathaway, his conglomerate, has been a net seller of stocks for the past 9 quarters. This means they've sold more stocks than they've bought. This includes trimming positions in big names like Apple and Bank of America. This selling spree might seem at odds with his long-term bullish stance, but it actually aligns with his value-oriented approach. He's cautious about the current market, where valuations may be inflated, and he's likely taking profits and reevaluating his holdings. But it's not all about selling. Buffett's also been making strategic acquisitions and adding to existing holdings. Berkshire Hathaway initiated a new position in Constellation Brands, a leading beverage company, and increased its holdings in Domino's Pizza, Pool Corp, and Occidental Petroleum. The increased stake in Occidental Petroleum is particularly noteworthy, given Buffett's long-standing interest in the energy sector. These moves suggest that even in a cautious market, Buffett continues to find value in companies with strong fundamentals and growth potential. He's not sitting on the sidelines, he's actively managing his portfolio and looking for opportunities. Buffett's annual shareholder letters are highly anticipated by investors worldwide. They offer a glimpse into his thinking and provide valuable insights into his investment philosophy and outlook. In his 2023 letter, Buffett expressed unwavering confidence in the American tailwind, the enduring strength and resilience of the U.S. economy. He believes that despite challenges and uncertainties, the innovative spirit and entrepreneurial drive of American businesses will continue to generate value over time. He also cautioned against imaginative accounting, the use of accounting tricks to inflate earnings or hide financial weaknesses. This is particularly relevant in the current market, where some companies may be tempted to manipulate their financials to mask the impact of economic headwinds. Buffett emphasizes the importance of scrutinizing a company's accounting practices and focusing on genuine earnings and cash flow. In his 2024 letter, Buffett reiterated Berkshire Hathaway's commitment to investing in equities, primarily American equities, and its preference for owning businesses over holding cash. He acknowledged the challenges posed by inflation and fiscal irresponsibility, suggesting that investors should consider assets with pricing power to hedge against these risks. He also emphasized the importance of fiscal conservatism, prudent financial management, and responsible spending, both for companies and for governments. Buffett also delved into the impact of climate change on the insurance industry, noting the increased frequency and severity of natural disasters. He highlighted the potential risks and opportunities for Berkshire Hathaway's insurance businesses, suggesting that climate change is a factor that investors need to consider carefully. Furthermore, Buffett discussed the significance of mistakes in the context of long-term investing. He acknowledged that even the most successful investors make occasional errors, but he emphasized that a single winning decision can have an outsized positive impact over time. This underscores his belief in the importance of learning from mistakes and focusing on the long-term picture. Finally, Buffett highlighted the role of savings and capital deployment in driving economic growth. He believes that saving and investing is crucial for generating wealth and prosperity. Financial experts offer a range of perspectives on Buffett's recent moves and the overall market outlook for 2025. Some interpret his cautious approach as a warning sign, suggesting that the market may be overvalued and due for a correction. They point to the Buffett indicator, the ratio of market capitalization to GDP, which currently stands at historically high levels, potentially signaling an overheated market. A survey indicates that individual investors remain optimistic about market returns in 2025. However, professional forecasts point to stretched valuations and potential economic slowing. An outlook suggests more muted gains for the stock market in 2025, with opportunities in U.S. equities, growth, and value stocks. They also emphasize the potential impact of artificial intelligence on productivity and corporate earnings, suggesting that AI could drive a new wave of economic growth and market returns. They also raise the possibility of 2025 being a pause year in the stock market, with more moderate gains after 2 strong years. An outlook on the U.S. housing market suggests a continued freeze, with subdued growth. They highlight the impact of high interest rates on affordability, and the potential for policies to further influence market dynamics. It's also worth noting the expert opinion that gold, while potentially attractive in times of uncertainty, should only constitute a small portion of a diversified portfolio. Investors should be cautious about chasing gold returns and avoid the common pitfall of buying high and selling low. Warren Buffett, while refraining from specific predictions, offers a wealth of wisdom for navigating the market in 2025. Here are some key takeaways for investors. Buffett's substantial stock sales and growing cash reserves suggest a cautious approach to the current market environment, where valuations may be stretched. Prioritize companies with strong fundamentals, durable competitive advantages, and competent management. Look for businesses with solid earnings and realistic valuations, avoiding speculative investments and overvalued story stocks. Explore opportunities beyond U.S. equities, including international markets and other asset classes. Factor in the potential impact of inflation, geopolitical tensions, and policy changes on your investment strategy. Consider assets with pricing power to hedge against inflation risks. Stay disciplined and avoid emotional decision-making, especially in volatile markets. Remember Buffett's advice to be fearful when others are greedy and greedy when others are fearful. By incorporating these principles into their investment approach, investors can navigate the complexities of 2025 with greater confidence and potentially achieve long-term financial success. If you found this video helpful, be sure to smash that like button and subscribe to my channel for more investing tips and insights.